This is Brad Wolff, and this is going to be the Emini review for August the 1st, 2022. You can find the rest of this review, which will be posted on the brookstradingcourse.com under blogs. So as you can see, Al marked at the top of the chart. Today was a bull trend from the open that later became a trading range day, which is very common when you have trend from the opens. I think it's around 60% of the time the market goes sideways and enters a trading range whenever you have a trend from the open. So the market gapped down, and there were two consecutive bull bars that created a buy the close market. In general, when you have two consecutive bull bars closing near their highs, it's a strong enough breakout for a second leg up. And you can see the market had three pushes up, which was a parabolic wedge that led to two legs down and a test of this low, which was the double bottom. The odds favored this rally was strong enough that it would probably be retested. Another thing to note is you had the July high, which was the prior day's high, Friday, that was likely to get tested as well, which is what happened here. And typically when you test higher time frame support and resistance, such as a monthly chart, prior high, the market will go above it and then it'll pull back and have to retest it, which it did somewhere over here. So the bulls, they had a trend from the open. This was disappointing. Strong enough trend line break. They got a second leg up, which was strong. However, with this sell-off and this surprise, you had a big down, big up, which increased the chances of sideways trading. The odds favored a second leg up here. They got a second leg here, and then we had a two-legged pullback. This bar was disappointing enough to increase the odds of the market becoming a trading range here, in which the market sold off. And you can call this a lower high double top. You can call it a double top major trend reversal. You can call it a wedge. It doesn't matter. The odds favored a couple legs down and possibly a test all the way down to here. And the bears ultimately got a double top, break below the neckline, and a measure move down to this area. The most important thing to realize is the market went sideways here, and a lot of bulls would give up here, and the market became always in short. And at this point, none of these reversals were strong enough to reverse the move down. Also, trading range, they typically in a trading range day, you have a leg up that'll last for half the day, 40 bars, and then you'll have a leg down that will create the other half of the day. And you can see the stop entries that Al marked, which are reasonable stop entries for the day. Here and here, it was buy the close, another buy the close bar, closing near its high, reasonable buy. This was a strong enough bear bar to lead to a second leg, which is why Al marked it. And here, this was strong enough. This was strong enough that the market was likely to test back to this area. So a lot of bears would get out here. Bulls would buy here. They would buy here. Al did not mark this because of the three legs down, probably a second leg down. Bulls, they will buy here, betting on a retest of these highs, or even here. Bulls get out here. They can sell below any one of these bear bars closing on their lows. This bar's climactic, breaking below here, so they wouldn't sell below that low. We had a two-legged pullback, failed to break above the moving average. Traders will consider selling below that, or even this right here. This bear bar was strong enough to probably lead to a second leg down, plus this channel down was fairly tight ever since here, and this was a micro channel that the odds favored a second leg. Bears would sell below here, however they would have gotten out if the market would have closed on its high right here. That's another sell. Traders could sell below here, but it's a possible wedge. 1 or 1, 2, 3. Bears get out here. Bulls start buying because of the wedge. They expect a couple legs up. Bulls can even buy here, or they can wait for the wedge top to begin to fail and reverse up. Possible bull breakout above a wedge. They can buy here, and those bulls will get out below here. Overall, trading range price action Bulls, they get a couple legs up, deep pullback, another breakout that leads to sideways and disappointment. The bears had a sell-off, but it led to disappointment. And then the bears got consecutive sell climaxes. However, every bear breakout was led with bad follow-through, and the market eventually retraced and closed around the midpoint of the day's range.